Um, Good evening, guys, and how's everyone doing? I hope everyone is fine wherever you're watching this video from currently. So, guys, I'll be going straight to it. Okay, so today I'll be talking about price action. Okay, and how they work and how everything works. Pretty much, I'll be starting with candlestick formation. Okay, price action comes in different ways. Okay, it comes in patterns, it comes in different ways, but today let's just focus on candlestick formation. Okay, so I'm focusing on candlestick formation. I have actually talked about candlestick formation before, but I just want to go in depth and show you guys how these candlesticks look like, and talk about over like 7 different candlesticks, so you guys can have the in-depth understanding of what candlesticks are. Do you understand? So let's quickly go straight to the next thing. They said, what are candlesticks? Okay, what are candlesticks? Pretty much, candlesticks are just a way of communicating information. Do you understand? Those are the major things you come into the chart and you see. Whenever you come into the chart, the next thing you are seeing, the very first thing you are seeing is candlesticks. You are seeing a lot of candlesticks moving, a lot of previous candlesticks and the ones that are actually just being produced. Do you understand? So now it's just a way of communicating information about how price is moving. Now, candlesticks actually deal with a lot of things according to the way price moves. You understand? And it's very important that you pay attention to how does this really affect me? How does it really affect my decision and all of things like that? It's a very, very vital thing you should pay attention to. Okay. So now you have to know that chart shows price. Whenever you look at the chart, right, you see price by the right and the time on the bottom, right? You see time on the bottom, which is the horizontal axis, which you can see my cursor here, and you see your price at this side. If we've actually opened what's it called, trading view before. So you see this dates are always under here, time and all of this like that. Then the price are actually here. So now, moreover, the chart is made of bars that have little lines streaming from top and bottom. These are known as candles. Do you understand? We name them candles. That's what it's called. Do you understand? Now the candles conveys four prices of information. Four pieces of information, I mean. It conveys what? Four pieces of information. The very first piece of information it contains is what? The opening price, right? The high price, the low price, the close price. Okay. So now we all already know that the candlestick actually has to do with two things. There are two types of candlestick, right? The bearish and the bullish. Okay. Pay that there's the red one and the green one. The ones that indicate the sellers, the one that indicates the buyers. Do you understand? So now each of them have different opening time and closing time. Okay, each of them have different opening time and closing time. Now let me make this clear to you. Look at this red candlestick. Okay, look at this red candlestick right here. If you can see my screen clearly, I hope you guys can see my screen clearly. If you can see my screen clearly, you see this red candlestick right here, right? So now this red candlestick here is come, let me go back. This red candlestick here now is showing me that okay, yes, when price opened, when price finished, when this candlestick, let's imagine the 1 minute candlestick, after after 1 minute, right, there will be a change in the candlestick that is actually being formed. So now the next one that's going to be forming is this, right? The next candlestick that was formed was this. So now immediately it opened at this point. Okay, this point here, if you can look at my cursor here, this point here, that's where it opened from. Then this was where it closed. Okay, it's closed at this point. So this is the opening price and the closing price. Okay, this is the close price. Now let's talk about the high price and the low price. Okay, this point here is the low price. Okay, this was where it got to at like lowest. Let's imagine this was where it got to lowest. Then at this point was the high price, was the highest it went to. So now same thing as this. This was the opening price, the closing price, the highest it went to, and the lowest. The lowest it went to, then the highest it went to. Let's talk about the bullish candlesticks now. How do the bullish candlesticks open? It's going to be inverse, right? This is going to be the opening price, while this will be the closing price, okay? The opening price, the closing price. How that makes sense? Same thing as this, the opening price, the closing price. The highest it got to, the lowest it got to. The lowest it got to, opening price, closing price, the highest it got to. So now, these particular tiny lines are called wicks, okay? They are called WICKS. So they are called wicks, okay? So you have to pay attention to that as well. And Let's go further into it. So now candlestick refers, I've actually explained this already, right? Upper, open, close, and all of things like that. I said that there are two candlesticks, the bullish candlesticks and the what, and the bearish candlesticks. So now all these are actually just stories. I don't want to really go in depth to this, but let's go to why do candlesticks work. Okay, price action traders rely on candlestick because they convey a great deal of information about each trading period in a visual format that is easy to interpret. Do you understand? Allowing traders to compare the behavior of price in different time periods with a quick glance at a price action chart. Do you understand? So merely looking at the chart, you can easily know what is really happening. Do you understand? Let's imagine you see a dodgy candlestick somewhere at the bottom or at the top of something. You understand? You know what it means. You know everything. You automatically have an in-depth knowledge about how this whole thing work. Okay, you already have an in-depth knowledge about how these whole things work, and you don't want to sleep on it. You want to make sure you are paying attention to every detail, because immediately you come on the chart, right? Let me share a new screen. Let's imagine we go to trading view. Yeah. So now you go to trading view, right? No matter what happened, right? No matter what you are actually doing, the very first thing you are seeing are candlesticks. Okay, the very first thing you are seeing immediately you open this chart, right? You can see the very first thing you are seeing are candlesticks. As you can see them. So you now understanding how these candlesticks form. They don't just close, they don't just open the way they want. You understand? They have been studied, and we've been able to find out that okay, yes, there are things that actually that we can make decisions out of barely looking at them. Do you understand? Let's go back to what we have. So now, why do candlesticks work? Like I already said, they communicate. That's the very first thing. Take note of this. Candlesticks communicate. They say something. They tell you something. Do you understand? Another thing you should have to pay attention to is every candlestick in the chart means something. They mean something. Do you understand? They mean something. Every candlestick in the chart means something. Another function of why do candlesticks work, do you understand, is they help in decision making. Candlesticks help your decision when you are making your decision, right? When you see a candlestick confirmation, it also includes that into your what? Into your confluence, right? If you want to sell, you are waiting for an engulfing candlestick, or you are waiting for a pin bar, or you are waiting for one of those things. Do you understand? Then you are like, automatically knowing what next to do. You are seeing a dodgy candlestick, an indecision. You're waiting for the next candlestick to give you a confirmation, and then you know what's up. You understand? So it helps you. It helps your decision making. You understand? Now it also helps you wherever a candlestick with a long wick, blah blah blah. We will still go about it. So now the ability to read candlesticks allows the price action traders, to become a meta strategist. Do you understand? Taking into account the behaviors of other traders and large scale market movers. In other words, candlestick patterns help traders. Now, I was talking about the people who move the market during the last class, right? So now, during the last class, I said that there are some people who are bulk traders, right? Who are I won't call them, who are high skill traders, okay, that are actually pumping money into this market. I talked about CBN, I talked about your normal GT Bank, I talked about your normal Access Bank and all of things like that. You get, I talked about everybody like that and all of things like that. So it is important that you pay attention to what we are actually saying, because it will definitely help you. So, and I'm going to be taking each of them along the line. You get, I'll be referring back to what I've taught as well as still keep going forward. So now, the ability to read candlesticks allows you to do what as a price action trader. Now, don't say you can't do without price action as maybe a technical analyst. Okay, as a technical analyst, yes, you use some technical analyst tools pretty much, but the point is you need confirmations. You need a lot of confluences before you risk your money on a particular trade. Do you understand? You need to be sure that okay, yes, the reason why I'm going into this trade, you understand? The reason why I'm buying, the reason why I'm selling, which is the major two things we do in forex, like I've said before. The reason why I'm buying is by this indicator, by this price action movement, and all of this like that. I hope that makes sense. So let's go to the next one. Now, let's talk about the very first one I want to talk about. The very first one I want to talk about is a dragonfly. Okay, take note of this. if you have to jot these things down, make sure you do that, because it's really going to help you. You have to really jot these things down, because if not, you forget, and except you have to come back to watch this video again. But anyways, so the dragonfly and the gravestone, let's talk about those kind of two candlesticks right now. So now the candlesticks movements actually are based on a whole lot of things. Okay. Okay, let me go to dragonfly. Let me come back to this. Let me come back to this. Let me come back to this. What are candlesticks? Yeah. Okay. Let's talk about the very first candlestick I want to talk about now is the doji. The dragonfly and the gravestone that I mentioned before are actually part of the doji candlestick. Okay, as you can see them here, the gravestone, the traditional, the dragonfly, then the long legged. But let's start with this. Let's start with this, the long legged. Yeah. So let's start with this. The doji. Now this candlestick has zero or almost zero range between its opening and its closing. Do you understand? Does that make sense to you guys? Yes, recently I explained this, right? This is the opening point of a bearish candlestick, then this is the closing point, right? For a bullish candlestick, this is the closing point, the opening point, okay? So now, a dodgy candlestick now is now like, okay, it has zero range in the sense that it does not have a lot of body, okay? This particular black thing, you can see my cursor here, symbolize body. That's the body. These 2 points here symbolize the week. Okay, if you can draw it as well, you can easily just label them. You get. So now this is the body. These are the 2 weeks, upper week and the lower week. Okay, now same as this is the body, the upper week and the lower week. So I'll use the body for you now. Say this dodgy candlestick now has zero body, or at almost, at least its body is just very tiny. It is just flat. If you can pay attention to this here, I don't know, can we see this, All right, guys. So sorry about that. My someone called and then my network just breached. So let's go. Let's go. Okay. So yeah. All right. So I'm looking for a dodgy candlestick right now. I hope if you don't know how to actually just draw it, just draw a candlestick, right? The one I'm going to show you now. Just draw that particular candlestick, then you're good to go. Okay. So yeah, I'm seeing a dodgy here. Can you see a dodgy here? I hope you can see this clearly. You can see these two dodgy candlesticks. Okay, you see how they look like parallel. They are very, very tiny, right? Their body is very tiny. I hope you can see that. You can see a dodgy candlestick here, right? You can see a dodgy candlestick there. You can see a dodgy candlestick there. That's showing you that that's how a dodgy candlestick look like. I hope that makes sense. I hope you can see it.
Yes, yes, we can.
All right. So now it's important that you pay attention to what I'm going to say next, okay, as regarding a dodgy candlestick. So now, rather than implying potential reversal or clear dominance of either bears or blues, this candle suggests indecision. The candlestick means what? Indecision. The dodgy candlestick means what? Indecision.
Indecision.
Do you understand? Or
Yeah.
balance between the two forces. Do you understand? So neither buyers nor sellers are really in control at that point in time. Do you understand? So during this time, when there were two dodgy candlesticks here, buyers or sellers were not in control at all. Buyers or sellers were not in control at all. Do you understand? It was just two
Yeah.
candlesticks, indecisive candlesticks. So nobody was taking charge. Nobody, that's buyers or sellers, nothing is really happening. So when you see a dodgy candlestick, what do? You hold on. You do
Okay.
what? You hold on. You don't just rush into the market, okay? When you see that dodgy candlestick, you hold on. You wait till a good confirmation. What will that confirmation be? Do you understand? Let's continue reading. Now, a dodgy that occurs in the context of a strong trend implies the weakening of the dominant force. Do you understand? That resulted in that trend. That's not business. But let's say a long legged dodgy, as you can see now, has long wicks in both directions. It has both. You see two long wicks in both directions. Remember, I told you that these are wicks, okay? Then this is the body. So these two are two long wicks in the both directions. You understand? Implying strong balance pressure from both buyers and sellers. Now, let's talk about the next one. Now, I've talked about one. I've talked about the dodgy candlestick. An example of a dodgy candlestick is a long-legged dodgy. Okay. The next one now is the dragonfly and the gravestone. Okay, dragonfly and the gravestone. Now, what this implies, respectively, means that sellers and buyers controlled the market for most of the trading period. Do you understand? Dragonfly and gravestone implies that both buyers and sellers have controlled or are controlling the market for the most for the trading period. But then the opposite group managed to push price back to the opening before the close. While tradition and long-legged dodgy are reflective of indecision and stalling gravestones and blah blah blah. Now, gravestone and dragonfly are generally clearer. Do you understand? Gravestone and dragonfly. Can you see this? Can you see gravestone here? You can see
Yes.
dragonfly. You see that dragonfly looks like T. Okay, then gravestone looks like an inverse T. You see that?
Yeah.
So they are clearer and strong indicators that are forced in stepping in to push the market in the direction of the weak. Do you understand? And away from the bull. In this respect, gravestone and dodgy candlestick are similar to hammer and hanging man patterns, which we'll talk about later. Do you understand? So now, what does this really imply? Gravestone and dragonfly. Let's go and look for them in the charts. If we see any of them here, good. Do you
Based on.
say this? Can you see this one now?
Yeah.
So what's the name of this candlestick?
Dragonfly.
Okay, good. So now clearly we understand that this is what a
Dragon.
dragonfly candlestick, and
Yeah.
it definitely still means that okay, yes, from this point in time, the buyers are actually the ones in the market, right? From this point in time, the buyers have
Okay.
been in the market, the buyers have been in the market. Then it got to this point, right? The sellers tried to push price down. Okay, the sellers tried to
Okay.
push price down, but the buyers were strong enough to do what? To pull it back up. Do you understand? So what does this mean to me? What does this signifies to me? It signifies that yes, there is an opportunity for me to buy. You understand? That means it
Yeah.
means to me that yes, the buyers are really going to take charge of the market in no time. Do you understand? So now what I want to
Yeah.
do next is when I see something like this, I want to go long. Do you understand? Now you might be wondering that okay, why am I going long instantly? Why am I not waiting for any candlestick confirmation? Okay, I'm not. This candlestick I just saw now is not a what? Is not a it's not just the long legged dodgy. Do you understand? Or the traditional. Do you understand? Which simply means indecision. Okay, so now
Okay.
these ones they actually mean what they strongly mean what and I said generally they are clearer. Do you understand? They are strong indicators that a force is stepping in to push the market in the direction of the weak and away from the body. Do you understand? So immediately I've seen that I just need to just come here, set my stop loss to the next recent low. Okay, now this is my stop loss here, and I want to be targeting times two. Anytime you are entering a trade, I've said that often, you should make sure you are targeting times two. So if I'm entering a trade here now, I just want to target times two of that trade. Okay, on target times two, yes, and this is a good trade. You understand? For adventure, if I are taking my profits here, and you see, immediately I saw this candlestick, yes, price retraced a little bit, then it started pulling in my direction. Okay, now that's a very good trade for me. I've made my money. I don't need to be scared that okay, why the price push down here. All you just now have to do is trust your what analysis and stick to your stop loss. Okay, so that is a way you can easily use a dodgy candlestick to enter a trade. Now, like I said, it is not all dodgy candlestick you can use. Okay, it is just the one that shows clearer and what stronger information about the market. I hope that's understandable. Do you understand? Is
Yes.
there any
Yes.
question? Is there any question for me? Is there any question for me? Is there any question for me?
Mm.
Okay, so if there is no question, let me go straight to the next one we have. So now, okay, let me open this. So yeah, we have the hammer. Now, the hammer is a candlestick with a small body. Okay, what it does is a small range from opening to close. You understand? It has a long wick. The hammer is the next candlestick I'm talking about now. It has a long wick and it has a small range. You understand? From opening to close. It is not as tiny as the dodgy. Okay, this time around it has just a little bit body. Do you understand? That's a little bit of body on it. Do you understand? Now, in this respect, it is very similar to a dragonfly doji. It's very similar. Do you understand? The primary difference is that a dragonfly has will have essentially nobody, meaning the opening and closing prices are equal. Do you understand? Which is now let's go. The hammer appears at the bottom of a trend. Do you understand? In a long week, it has a long week, which implies an unsuccessful effort for the bears. Who are the bears again? Who are the people? Who are the bears? Are they the sellers or the buyers? Who are the bears?
Is that?
Who are the bears? Who are the people that are called the bears in the market? The bears, BARS, bears, bears.
That's the sellers.
Yes, the sellers. Yeah, right. The sellers are really the bears
Okay.
since they, bearing, bearing, bearing candlestick, bearish candlestick. So yeah, now this armor actually shows itself in what? Imagine in a downtrend, okay? Now price is coming down, the price is about to move up. You understand? Price is about to go in an uptrend, okay? Then this armor head can easily appear. Do you understand?
Okay.
Underneath that point. So yeah, let's look for it. I think I'm seeing one here, right here. Okay, yeah. So now I can easily call this an armor, okay? This is an hammer, a clear hammer. Do you see that it's coming from what price was selling, right? Let's just use this. Let's just use this. Okay, you see that price have been selling really, really. So the sellers have been the most active in the market here. Then immediately got to this point, right? The buyers started taking charge. Do you see that? The buyers started taking charge. You can see that. So immediately got here, price started tanking up. Do you see that? So now this candlestick, I'm currently on 1 minute. Okay, you can also see these candlesticks in what? In higher time frames. And what does that mean when you see this candlestick in higher time frames? It signifies to you that yes, there is going to be a strong movement. When you see price, when you see this candlestick confirmation in higher time frames and all, you want to pay attention to the fact that okay, yes, something is going to happen very soon and it's going to be significant. You understand? When it comes to higher time frame. But when it comes to lower time frame, the movement it will still obey the analysis, right? It will still obey the analysis, but you just have to pay attention to the fact that there are different time frames, and as well as there are different time frames, each time frames has its own strength in the sense that how much can this particular trade give to me. So just like in 1 minute, you are seeing one candlestick is forming 1 minute, right? In 4 hours, one candlestick is lasted for 4 hours. Do you understand? So now, if you go down in 4 hours, how many minutes are there in 4 hours? If you calculate those minutes, if you go to 1 minute, you will see all the candlesticks that are there. So you have to pay attention to that as well. That it also differs if it's the strength of each of these things actually differs, and it depends on where they are seen, in which time zone, time frame, and all of things like that. So now, let's now go ahead and talk about as such, a hammer candlestick is a contest of a downtrend, suggests the potential exaltation of the trend and the onset of a bullish reversal. Like I said, right? The neckline, often determined by the eye of the previous bar, is the level that price must hit on the next candlestick in order to confirm the hammer reversal signal. What does that mean? So it means that immediately this immediately I saw this immediately I saw this hammerhead here. What is I supposed to do? I should relax, wait for price to react. Now immediately I was able to get this particular confirmation here. I got this confirmation here. This candlestick was my confirmation. Okay, you can see that candlestick I just highlighted. This candlestick here was my confirmation. This candlestick here was my confirmation. So immediately I saw that candlestick, immediately I saw this candlestick, I know that okay, yes, this is a very good candlestick for me to go in for a buy. So if I had gone in for a buy at this point in time, you can imagine how much I'll be making right now. Do you see this? Do you see how far it went? So we are going for a buy under here, somewhere here. Then you can see how much I'm going to be making. Right? You can see that price didn't even imagine we kept our stop loss here. Price didn't even come back into our stop loss region, okay, which is a good risk. So I'm risking 1 to get 2.5. It's a very good risk. You understand? So with that being said, I'm going straight to the next candlestick. Yeah. So now let's talk about the hanging man. Okay. Now I've talked about I've talked about the doji. I've talked about the hammer. Now I want to talk about the hanging man. Okay. Now the hanging man is the name given to a candlestick that is identical in shape to the hammer. Do you understand? The difference is that while hammers occurs in downtrend, that's the very first thing. Hammer occurs where? In downtrend. Hammers occurs where? At the end of the downtrend. So when you see an hammer at the end of the downtrend, know that there's going to be a shift. There's going to be a shift in what? In price. There's going to be a shift in price. So now, immediately I see an hammerhead, I want to know that yes, price is going to shift from selling to buying. So now, the hanging man is the name given to a candle that is identical in shape to the hammer. Do you understand? The difference is that while hammer occurs in downtrends, the hanging man patterns occurs in an uptrend. Do you understand? The hanging man occurs in an what? Uptrend. In this case, the wick extends down, contrary to the uptrend, and suggests the emergences of bearish demand capable of pushing the price down. It is often the first sign that the uptrend is exhausting and the bears are stepping in to create a reversal. What does that mean? Now let's go and look for a hanging man, a hanging man, a hanging man, a hanging man. Good. See the hanging man here. Can you see this? Let me delete this. Can you see this particular candlestick here? This green one. Can you see that? I hope you can see that. Can you see that?
Fine.
I hope everyone can see. Can you see this? Can you see this candlestick here?
Yes, yes.
Exactly. So that's an hanging man candlestick. That's an example of an hanging man candlestick. So according to what it said here, and as it does work, it means that the buyers are exhausting already. The buyers are tired. They are leaving the market already. Okay, they pushed price to a certain point and they are profitable already. Do you understand? They are okay. They are satisfied. Now they want the bears to start taking charge of the market. Now, immediately you see this candlestick. Where is the candlestick? Yeah, you see it here. Do you understand? What does it mean? It means that the sellers have already started taking charge of the market. Can you see how price is dropping now? You can see that from this point, price has started dropping, dropping, and dropping, and dropping. I hope that makes sense.
Yeah.
Exactly. So now we all understand that. So now for the reversal signal to be confirmed, the subsequent bearish bar should reach the neckline. Okay. Now established by the open of the bearish bar on the other side of the hanging man. What does that mean? What does that mean? This is a very important thing. It's very, very important thing. Okay. A very, very important thing. Now you have to pay attention to this, that when you see an hanging man, okay, when you see an hanging man, right? Another way you can confirm this is that the next candlestick that is created, right, must be longer than the previous candlestick that was created before the hanging man. Let me go over that again. The candlestick, once you see an hanging man, the next candlestick that is going to be formed, okay, must be longer. The body must be longer than the previous candlestick that was formed before the hanging man. That's what this word means. It means that for the reversal signal to be confirmed, the subsequent bearish bar should reach the neckline established by the open bullish bar on the other side of the hanging man. Do you see that? So let's go and look for a scenario where it happened. So far, so good. For this one, it didn't happen. Price just stopped at this point. So one might not want to confirm this, and one might still be doubting. One might still be doubting. But let's look for a very good example. This is an inverse summary that's talking about. So guys, I'm looking for a candlestick that indicates that. So just hold on. It shouldn't be scarce now. Where are you guys? Where are you? Where are you? Where are you? Where are you? Okay, good. Do you see this candlestick here? Do you see this candlestick here now? I see this candlestick,
Yes.
right? Exactly. So it opened here, right? It opened here. Now, automatically, for a fact that it opened here, right? Price pulled up a little bit, then price pulled down back. So now, see the candlestick that was formed. You see this candlestick that was formed, right? You see that this candlestick is longer than this candlestick.
Yes.
Okay, this candlestick is longer than this candlestick, and this is where the what? This is where the hanging man is. You can see that it's in between these two candlesticks. So this one has to be longer than this. The body has to be longer than this. So immediately I get that confirmation. What am I supposed to do as a trader? I'm supposed to go in what? I'm supposed to go in short. Okay, short means you are selling. You understand? Immediately you get that
Okay.
confirmation, go in short, you sell. I hope that makes sense.
Yeah, it makes sense.
Yeah, good. So now, once you sell, you set your stop loss to the next recent resistance zone, and you target times two. Okay, any trade that is not giving you times two does not worth taking. Okay, how that makes sense?
Yeah.
Good. Now, this is a very good risk, 1.990. That's fair. You understand? If I'm losing $10, I should be getting $19 from this trade. So now The next one I have here now is the shooting star, right? So now the shooting star is also a very important candlestick, right? That helps in also I knowing what to do as a trader. So now the shooting star, this candlestick is simply the inversion of the hanging man. What does this mean? Hanging man, right? The wick is always below the body. I mean, the long wick is always below the body. But the shooting star, the wick is always what above the body. Let's go and look for a shooting star. Shooting star, the wick is always above the body. Okay, thought I saw a shooting star. So good. See a shooting star here. You can see the difference, right? You can see this. This is a shooting star. You can see this candlestick here, the shooting star. Do you see that?
Yeah.
It's different from that hanging man. Where is that hanging man? It's different from this. It's different from this hanging man. You can see this. This is inverse. You see the wick is long at the bottom here. Why this one the wick is under here? Do you understand? So now,
Yes.
what does it do? Basically, it's a that's a very small body and a long wick protruding above it. With little to no wick below. Yeah. So now the shooting star occurs at the height of a uptrend. Do you understand? Let's imagine that there's an uptrend and price gets to a particular point. This long wick implies that resistance to further bullish movement has been encountered. Do you understand? It means that there is something resisting price. Do you understand? Does that make sense?
Yes.
So it means that there's something resisting price at this point in time. There's something resisting price at this point in time. So let's go and look for what was the resisting price at this point in time. Good. You can see a resistance zone here. Um, Tosin, have you watched the video on resistance zone? Bro? Have you watched the video on resistance and support zone?
Yeah, to some extent.
Oh, okay, okay. So yeah, so now this is a resistance zone. If you guys are for me, this is a resistance zone, okay? So immediately price got to resistance zone, price created this shooting star. Does that make sense? It means that price has what encountered, do you understand, a resistance, and the bearish people should start taking charge of the market. Do you understand what this is resistance zone means? A resistance zone can also be called what? I didn't make mention of this during the class. Just take note of this, guys. A resistance zone can also be called is a ceiling as well as a supply zone. Do you understand? In economics, they
What do you
taught
call
us
it, please?
demand a ceiling, like a ceiling, something like preventing something, as well as
Oh,
can also be called a supply zone. Okay, can also be called a supply zone. That's what a resistance zone is called. So now, for the support zone can also be called the demand zone, right? The demand zone, while it can also be called a ground. Do you understand? Just like the floor, it gets just the floor of the market where price is trying to bounce up from. You understand? So now,
yes.
just like what it is, price when price gets to this point, it forms a resistance zone. It does what resist price from moving further. Okay, I guess that makes sense, right?
Yeah.
Does that make sense? Good. So now that's that. So let's go straight to the next thing that we have here is a strong, in this case, a strong black candle or a price at the level of the previous bar open, then act as a okay, let me confirm this. In this case, a strong black red candlestick or a price at the level of the previous bar open can act as a confirmation.
Okay. Okay.
So now what will act as a confirmation for this particular candlestick is when I see this kind of candlestick. Okay? So from this kind of once I see this shooting star, I want to go in long. Okay, I want to go in short now. Remember, it is at the top of what? Shooting stars can only be found at the shooting stars can only be found at the top of what? An uptrend. Okay,
Okay.
so I want to go in short. So imagine you've gone in short now. Imagine you've gone in short now. You still be making profits. You can see that. Imagine we've gone in short from this zone, from just seeing that shooting star alone as our confirmation. We go in short. You understand? Set our stop loss a little bit, and we target times two. Target times two of it. Then that's good. It's a good trade. You understand? It's a very good trade. Does that make sense?
Okay.
So now let's go to the next one. The checkmate. The checkmate. In chess, there's something called the checkmate, right? And
Yes.
anybody play check. So we have the checkmate, right? The checkmate. Now the checkmate occurs when price becomes locked in a narrow trading. Now, range narrow trading range preceding a reversal in direction. In a typical bearish checkmate, right? An uptrend meets a resistance level that is tested and then rejected due to co- consequent, consequent pressure from holding the level. Clearly, can you see this image here? Price has been in this zone for a very long time. Okay, price has just been testing the zone, testing the zone, testing the zone. Let me show you something that has happened here. So this is what an example of what happened, right? What happened here? You can see this, right? So this is an uptrend. Price is in a resistance zone, right? Clearly, then we can see a lot of rejection. Price comes back to that zone to retest. Price comes back to that zone to retest. You understand? So there are a lot of rejection in that zone. You understand? So now what confirms that? What confirms that? Now let's say in this case the checkmate begins as the first candle in the range reaches a high that the pressure from bulls is unable to surpass. What does that mean? What does that mean? Price remains deadlocked in a tight trading range before the range is broken with a long bearish candlestick, indicating that the reversal has begun. Do you understand? What does that mean? That means that if I see this movement now, right, this particular movement, let me go to probably 5 minutes. 5 minutes. Good, good. You can see it's a good check. Good. So now, immediately I see this movement, right? Immediately I see this rejection in price here. I want to take my ruler or my way. I just want to draw a line. Okay, I want to draw a line to this week. Let me do this. Where is this week? Good. So now I want to draw a line to this week. As far as the buyers did not pass this week, okay, this line, I mean, not this week. I want to draw a line to this week, this recent week, this week that this red candlestick gave. I'm on 5 minutes now. Okay, 5 minute time frame. Now I want to draw a line at this point. So let's go to 1 minute back and see if the bulls, if the you see that the buyer they couldn't push past that level. You see that no buyers candlestick is found here. You understand? So it definitely means as far as the candlestick are able to pass here, it definitely mean what the reversal has begun. Okay, it definitely mean what the reversal has begun. I hope that makes sense. I hope that makes sense. Does that make sense?
No, I don't understand, please.
You don't understand?
Yes.
Okay. So now look at this now. Look at this image here, right? You see, this is an uptrend. The buyers have been buying, and buying, right? Price has been
Okay.
going up. Now, it gets to a point whereby it comes to a resistance zone, right? I told you this is a resistance zone, right? Now,
Yes.
immediately it got to a resistance level, price was trying to break through that resistance level, okay? On a normal day, a resistance level, what do you do in a resistance level? You sell, right? That's what you do in a resistance level. You don't
Yes.
buy in a resistance level, you sell in a resistance level. So now, what you want to do now is you want to pay attention to the candlestick that is being formed. Okay. Now, on 5 minutes here, I can see a whole lot of candlesticks that are being rejected. Okay.
Okay.
You can see this candlestick. All of them they are not having good bodies. Okay, like 1, 2. You understand? These two candlesticks, they just pull up and
Yeah.
they come down, they pull up, they come down back. You understand? So now,
Yes.
what does that signify to me? It means that there is something really happening at that point in time. There's going to be a checkmate in that zone. You understand? So it can either
Yes.
be yes to win or the rules will win. You understand? So now,
Yeah.
in chess, once checkmate, once someone's checkmate, it means someone has won. Now somebody has won, the game and all of this like that. So now, what you want to do is you want to analyze, right? You are a technical analyst, right? What you now do
Yes.
is once you see this multiple rejection, you calm down, okay? You draw this line, okay, to the recent high, the recent high that was created. If you come to 1 minute, you will see it. This was the highest zone. This was the highest point price went to. Okay, so far at this resistance zone. Okay, at this resistance zone, this was
Yes.
the highest price went to. So now for the buyers to be unable to get to this line again, and you see that the buyers did not get to this line again. This green candlestick did
Yes.
not get to it. You see that
Yes. Yes.
before the base started gaining power, so definitely it means that the buyers are already they've lost already. It means the bearish ones have actually won at that resistance level, which signifies the bearish checkmate. Does that make sense?
Yeah, it does.
So now this for this right for this particular analysis, it means that you really need to farm this analysis with at least two strong bearish bars. You understand? You need to see,
Okay.
like, see this. Do you see that? When this buy happen, right?
Please, there is
Price.
an underground noise under your voice.
Okay. Okay, can you hear
Yeah.
me clearly now? Is it better?
Yeah. Yeah, it's perfect now.
Okay. So now, imagine price got to this zone, right? You see that price didn't come back again to that line, right? So now,
Yes.
this green candlestick, right? The next candlestick that was giving birth to was a red candlestick, right? A
Good.
bearish
Yes.
candlestick. Now the next
Yeah.
one was what? A bearish candlestick. As far as I've seen these two candlesticks, they look rich in the sense that their body is long. Do you understand? They have long
Yeah.
bodies. Immediately I see this thing, I also want to go in for a buy. That serves as for a sell. That serves as a confirmation for me. Do you understand?
Okay.
Does that make sense?
Yeah,
So
it does.
now, the next one I want to pay attention to now, in a bullish checkmate, the opposite occurs, right? The opposite. We've seen this one in an uptrend. Now, what we are looking for is in a downtrend for an uptrend to start, right? In a support level. Remember that the support level is always in a downtrend, right?
Yes.
Support level is always in a downtrend. So now, this is a support level. These zones here are support levels, okay? So now, this is a support level. So now, immediately I see this particular movement, let's imagine there's a rejection in price and all of this like that. Like this point now, I'm sure. Let's check 5 minutes. Good. See this? Do you see that there's a lot of pullback? Do you see that?
Yeah. Yes.
You can see this a lot of pullback, a lot of pullback here now happening here, right? Just before the buyers took charge of the market, right? Let me look for did it happen in the other ones are just shooting, engulfing. So now let's just look at this one, right? This one here. So now you can see this, right? Before the buyer started taking charge of the market, right?
Okay.
Price did a lot of tests at this point in time. You get. So now what does this
Yes.
mean? It means that in the bullish checkmate, right? This one's going to be bullish checkmate. That's the opposite. Bearish, bullish. You understand? Typically at the support, do you understand? At the support level, the long wick of the first pin bar in the red box, do you understand?
Yeah.
Establishes a low that the best cannot achieve. Now, that means that there's a point at which the bears who are trying to take charge of the market here are really trying their best to really, really achieve. Right now, you can see this candlestick here. So the sellers tried to push price down, then there was a rejection. You can see that there was a
Yes.
rejection. So now it means that once you see that, you wait for confirmation before you enter for a buy. Okay, you know in a support zone, what we do in a support zone is we buy. So now price is trapped thereafter in a narrow trading range. You understand? That means price keep going up, down, going up, down, going up, down. You understand? In a
Yeah.
particular level. Now, until bulls successfully reverse the trend, immediately bulls gain their power. You can see this 1, 2, 3. It means that the buyers are now in the market. Then you'll be able to make your money off that trade. Does that make sense?
Yeah.
1, 2, 3. I'll also talk about these three candlesticks formation soon. So in this pattern, in the pattern that have been presented thus far, a simple concept should be imagined. With a long wick appears in the context of a trend, it often signal a potential reversal of that trend. So when we see a long, a good, like I said, a rich candlestick in the sense that it is long, it has a lot of body. Do you understand? It definitely means there's going to be a reversal in the trend. Okay. So now let's talk about the evening star. Okay. So now I want to really talk about everything now, so we won't have to come back to this again. I won't come back to this again. So if you have to jot it, just jot it down, go over it again, and I think that's the very best you can do. So now let's go straight to what we have here. The next one is the evening star. Now, the evening star is a small-bodied middle candlestick in a three-bar pattern you get that provide an early indication of a reversal from a bullish to a bearish trend. What does that mean? The evening star is seen, right, at either the top, do you understand? At the top of a bullish trend. Let's imagine buyers have been buying for a long time. The bullish guys have been the one in the market, right? Now, then there's going to be a reversal from the bullish to the bearish, right? So now the evening star can give you a good confirmation to enter for a sell at a particular time. But you need to pay attention to the fact that there are three things you have to pay attention to. Three things. Now, a long bullish candle. Do you understand? Now, I'll be talking about why is there supposed to be a long bullish candle, a small bodied bullish or bearish candle, or a doji that occurs. Do you understand? A black candle that opens at or below the low point. Now, let's go again from where I stopped. Typically, with an opening price at or a gap above the close of the previous candle. If you can pay attention to this, right, you can see that this was the candlestick that was formed first, right, before this candlestick. Now you see that the closing price, right, is not close to this one closing price. Do you understand? The closing price of this is not similar to this one closing price or this. Do you understand? It's not similar to this closing price. Let me look for an example of an evening star. I think I've seen that. Soda. Yeah, good. Now, see, for a fact, okay, don't be scared when price move the way it wants to move. Just know that you have a reason why you enter this trade. You understand? That's how traders do. Don't be scared. So now, see this particular candlestick here now, I can call it an evening star, no doubt. Okay, or even this one, say I can call it an evening star. This is a clear evening star, sir. Do you understand? This is a clear evening star. But pay attention to what it says. It said that if the body of the closing, right, and all. Now see this particular one now. This closing, this was where it opens, right? It closed here. Is actually inside the body of this candlestick, right? So now I want to not really focus on this candlestick, right, as my evening star. I want to focus on another one, and I'm going to jump to this next one. So now let's point at this now. So he said this pattern represents a potential top and therefore a potential signal to sell. There are three characteristics of this signal: a long bullish candle. Now, what does this mean? You see this right here. This is a long bullish candle, a very bullish candle. Okay. Now, bullish, 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 bullish. Like they follow each other, right? They call them three. This one is even four safe. Some people call them three black widows. Have a three black men. Have a three black something. I'll still talk about them. So now, this particular one now signifies that, okay, yes, buyers have actually shown their power, but now I'm seeing a shooting star right here. Do you understand? Now I want to wait. Do you understand? I want to wait for my next candlestick. What do I want to wait for? What do I want to see in the next candlestick? I want to make sure that the next candlestick closes. Do you understand? I want to make sure that the next candlestick closes as a bear candlestick. I want to make sure it closes in a sell. Do you understand? Immediately it closes like that for me, I'm going to just go straight for a sell. regardless of what's going to happen. Do you understand? I want to go in for a sell straight up. I want to go in for a sell automatically to the next. I want to target one at least. I'm targeting if I'm risking $10, I should be targeting $20, $30. Do you understand? So now that's how it works. So you can see simple as ABC, right? This target was even over. If you are risking one, you'll be getting 3.7. Do you understand? So if I'm risking $10, I'll be getting 37 dollars or thereabout. So now you can see that one thing about price is sometimes price actually behaves the way they want. But you as a trader, you have to be smart. You have to be the one to know what to do at a particular time. Okay. So now let's imagine that we entered a sell from here, given the fact that we obeyed this analysis, which is the what evening star. Now we've got a confirmation that price is supposed to sell, right? So now price started selling, selling, selling. They started making profits. But see this reversal, price reversed to this point. What does that signifies to me? What actually comes to my head immediately? I see that movement, that move. Do I run away from the market? Do I exit? Do I just exit in loss, or do I just feel okay? Yes, price has gone against me. But then again, once price have moved at least to this point, right? It is advised that you do something which is called break even. What does break even means? Break even means you want to move your stop loss, you see, to your entry point. You want to move your stop loss to your what? To your entry point. I'm coming, guys. Um, right, so guys, now you can see simple as ABC, right? Now, if I had entered the sale from here, right, price did all this rubbish. Now, immediately got to half of your target. Immediately you're seeing half of your target. You want to set break even. What does break even means? Break even means you are moving your stop loss. You are moving your stop loss to your what? To your entry point at least. Your stop loss should be at your entry point or below your entry point. So now, imagine I've entered a trade here and I'm in profit already. I just want to move my stop loss at least to this point. Okay, I want to move my stop loss at least to this point. You can use candlesticks to actually set your stop loss. I'll talk about that tomorrow. How to use candlesticks to set your stop loss and how to set your take profits. So now, this signifies a very good opportunity for me. So now, immediate price reversed to this zone. Okay, remember this point where you entered, it has already created what? A resistance zone. Don't be scared. Don't be scared. You see that immediate price got there, right? What happened? Price sold. Is this making sense to you guys? Immediately
Yes.
price got to that zone. You can see that you don't have to be scared. Some people use this opportunity to make crazy money in the sense that they go as far as opening more position in this point. This is a very good opportunity for you to layer if you have the capital to. Do you understand? You see something like this, you don't waste your time. You understand? You see this engulfing candlestick, you just wait small. You see this candlestick here, just open. Some people open as much as 50 positions and thereabout. Do you understand? Because of what? They've seen a confirmation already. The evening star has confirmed our analysis. So we don't need to be scared. Do you understand? As far as price has not touched our stop loss, we are still in the game. And it's important that you stick to your stop loss. I must say that. You must always stick to your stop loss. Don't for any reason change your stop loss. I have done that and I don't advise anybody to do that. So stick to your stop loss. So now, I hope you understand how the evening star works now. Do we understand?
Yes.
Good evening, Daniel.
Yeah, yeah, please.
Okay, so I wanted to ask, are you doing a record of the whole lecture?
Am I currently recording the class? Yes, it's currently live on YouTube as well. Yes.
Okay, no problem. Thank you so much.
All right. All right.
Okay, you can go on.
Okay, okay, yeah. So now let's check out the second one. Not the second one. How many have I mentioned now? How many kind of candlesticks have I mentioned right now? So far? How many?
I'm Mr.
About how many?
Up
How
to
many are
more
they
than
in
six.
total? Yeah?
More than six. More than six.
Okay, okay, okay. Yeah, that's good. That's good. I'll go over them again, just a quick recap. So now the evening star is the next one. Evening and morning, there was an opposite. I mean, the morning star is now the inverse of the evening star. Do you understand? It's now
Yes.
the inverse of the evening star. Now, pay attention to these three things I said here, right? I said a long bullish candle, a small bodied bearish, and this is where the evening star is. The second one is the evening star. Then the third candlestick should be what? At least a bearish candlestick, which was what I showed you here, right? You can see a long bullish candlestick, the evening star, and a bearish candlestick. It confirms our analysis. No long story. Now, what about the morning star? The morning star shows us that there's a long bearish candlestick. It is now, the evening star is found at the top, right? After a bullish movement, right? Now, the morning star is now found at the bottom, okay? After a what? A bearish movement. Do you understand?
Yeah.
So now we have a bearish movement. The morning star is now found in the inverse of the evening star. Now, the morning star is the inverse, right? At the support zone. Evening star at the resistance zone. I hope you guys are taking note of those things. Take note of those things. So now, for you to confirm your morning star, you must see a long bearish candle, a long red candlestick. You understand? A small bodied bullish, which is the major distance that we are focusing on. Then the next one you have to see is the blue or the green bullish candle. Do you understand? That opens at or above the eye of the previous candle that closes at or over the center of the candlestick. So let's look for the what they call the name, the morning star. Yeah, morning star, morning star, morning star. Okay, good. Okay, no, 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 no. I'll see this. I won't call that morning star. Mm, good, 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 good. Do you see this? Do you see this candlestick here? Do you see this candlestick here? You can see that candlestick, right?
Yes.
I hope you are seeing that. You can see this candlestick. You can see this. You can see this long bearish candlestick followed by what?
Short.
The evening star candlestick.
Even
Then the small one. Then there is a long bullish candle.
bullish.
So now, if we entered our buy from here now, you understand? We're making money. We're making money. If we hold our position from this zone, okay, see how much you'll be making. You're making a lot of money. Do you understand? You're making a lot of money. So now imagine I have gone in for a buy at this point. I've gone in for a buy at this point, a long position. I've gone in, make like got this confirmation. I pulled in for a buy. You understand? The target times two. Remember, I always target times two. Target times two. So make it a culture. Do you understand? Make it a culture, make it a practice, okay? You can set a stop loss to this low, okay? This recent candlestick low here. Now, you can see that despite the fact that price came back to toil around our stop loss zone, it was a good opportunity for us to layer. Don't forget, our confirmation was there already. We saw this, then we pulled in. Now, why didn't I enter at this point? Don't always rush. You understand? There are times that markets can reverse and you lose your money. You understand? In a scenario like that, you have to be really, really careful. Okay? So now, I hope that makes sense to you guys.
Yes.
Does that make sense? Yeah. So now, the next one I will talk about now is the bullish engulfing. Okay? Now, in this pattern, the real body of a bearish candle is encompassed. Yeah, what does encompass mean? That means one is bigger than one. Do you understand? If you look at these two things, you can see this candlestick, which is the bearish. Then the bullish one has a lot of bigger body than the what? Than the bearish candlestick. Now it's encompassed by a body of a consequent bullish candle. Do you understand? So now this indicates an increase in activity from both bears and bulls. What does that mean? It means that both bears and bulls are really active in the market, and a shift of overall market sentiment towards bullishness. So there is a possibility that what price will start what moving in the uptrend. Price will start being bullish. Do you understand? Now, like with all the patterns we've discussed thus far, these patterns should be viewed in consideration of the trend at the time. If a bullish engulfing pattern appears in a downtrend, pay attention to this. If a bullish engulfing pattern appears in a downtrend, it will suggest a shift price trend and the onset of buying demand become the prevailing force. But if this particular candlestick go and show at the top of a what of a bearish trend or a bullish trend, you have to ignore. You have to ignore because at that point in time, the buyers are still active. So what do people do when they see something of sort? What do they see? What do people do when they see something of sort? People do what? People layer. People open more position. That is where your money, how to 10x your profit. You understand? How to 10x your profit. Let's imagine you have a very good account, right? And you're trading. Okay, so now you're in a trade already. Let me use this. Let me use this trade as an example. Which of them am I going to use now? Let me look for the one that has this. Okay, so now see this now. See this particular candlestick. You see this red candlestick, then this green candlestick, right? Immediately price got to this zone, this candlestick encompassed this candlestick. It's longer than this candlestick, right? Immediately price bought to this zone. Immediately, what you want to do here is you want to layer in this zone, okay? You want to put in more positions because you've seen that yes, the buyers are really active in the market. Now there could be a little bit of reversal. Don't be scared. Price will still go back in your direction. So immediately you see this, it's a very good opportunity for you, especially when you are seeing it in a what. This is a downtrend. Price got here, and then we are supposed to buy. Do you understand? Do you understand?
Yes.
Good. So now, uh, let me look at the next one. So now, the bearish engulfing. What an opposite, right? Bullish engulfing, bearish engulfing. You should understand that when you see bearish engulfing, it should be at the what? At the top of a what? A resistance zone. It should be at the resistance zone. Do you understand? It should be at the
Yes.
resistance zone. And when you see something like that, what you want to do is you want to sell. You don't want to do any other thing that sell. Do you understand? You see this candlestick here? You can see this candlestick. You see this long engulfing red candlestick. What you want to do next is you want to take your position and you want to short. Okay? You want to short at least target times 2. You can set your stop loss to this point here. The target times 2. You've made your profit and you're out of the market. Does that make sense, guys?
Yeah.
Good. So now let's go for the before we round it up. So now we have the Arami / inside bar. So now is it compulsory you really know all these candlesticks? Like, is it really even compulsory? Somebody might ask. Yes, it is, because everything you see on the chart, is it not candlestick that is named? Like everything you are seeing here, is it not candlestick? What forms the chart itself? Candlestick. So it's a very important knowledge you have to have. Do you understand? You have to know that it's not just something you're just going to look at or something you just want to toil with. You want to really take it serious. Do you understand? You want to really take it serious. So now, but then again, it is important that as a trader, you are focused on what really matters to you. Okay, pick one of these things and just focus on this. That okay, when I see the evening star, that is when I want to trade. You understand? Don't use
Okay.
everything. Or you want to say when I see the engulfing, right? That's when I want to trade. Or you can say when I see the 3 black crews or 3 red crews. I'll talk about that soon. That is when I want to trade. You understand? All those things
Yeah.
are what will really define you, what will really make you unique. You understand, in this market. For me now, I focus on only about 3 patterns. Okay, I focus on the patterns whereby price action come in in sets, okay, where candlestick form in a little bit of a M pattern or a W pattern. Okay, so once I see a W pattern, that confirms my analysis. I go in for either a short or a buy. Once I see a M pattern, I know I'm selling. Once I see a W pattern, I know I'm buying. You know, W is like W, you get
Okay.
Papa, I'm expecting price to pull up. M is like this. So now I'm expecting price to drop. So now that's what thing I focus on. You understand? You can focus on, okay, when I see the evening star, you understand? I want to go in long. When I see this particular candlestick, I want to go in short. You understand? You don't have to know everything, but I'm expected to teach you guys everything. Do you understand? I'm
Okay.
expected to teach you guys everything. So now let me look for, yeah, good. So now this is where I'm going to stop. Okay, these are really, really these are candlesticks that you can't do without in the market. Okay, these are candlesticks you can't do without. You have to pay attention to them. Do you understand? I'll still come back to this Arami kicker, piercing line, and dark cloud cover. But let's come to this three important candlesticks. So now we now have the three white soldiers, the three black crows. These are two confluences that are like crazy. When you see these candlesticks, you don't want to think about it twice. You want to go in. You want to follow that trend. You understand? Just pay attention. See something. See it here now. See it here. Immediately
Yeah.
I'm seeing this. I'm seeing this 1, 2, 3. Do you understand? Immediately I should go in for a buy. Do you understand? You buy. This that is buying. Immediately is buying. Let me look for a very good sell that I called. Now you can see immediately
Yeah.
1, 2, 3. Do you see that? I'm going for a
Yeah.
sale. Do you see this? Do you see this? I've made money. It's easy as ABC. ABC, ABC. So now you can see three crows. 1, 2, 3. Immediately you go in for a buy. Do you understand? You make money. Does that make sense? Three black crows and
Yes.
three white soldiers. So the three white soldiers, where are they seen? They are seen in a support zone. They are also seen in a downtrend. The three black crows, where are they seen?
In
At
the
the
support
resistance
zone.
level.
Yeah.
No, three black crows now, which is the opposite. They will be at the resistance level and in an uptrend. Okay, so you can see that these three what's it called again? Three white soldiers, right? Which are the red candlesticks, right? 1, 2, 3. They are seen at the resistance level. This is a resistance level, okay? This is a resistance level. You understand the resistance level. Now, the three dark crows are now seen. The three black crows, not dark crows, the three black crows are now seen in a support zone 1, 2, 3. You see that? Then you're going for a buy, then you take your money. You understand?
Yeah.
So now let's not talk about the tweezer pattern. What does the tweezer pattern look like? As you can see clearly from what is on the screen right now, you can see these candlesticks looking a little bit more convincing. You can see two hammerhead, two inverse hammerhead, right? Now, this first set, what indicates was bullish reversal. Does that make sense, guys? Bullish reversal. This here means tweezer tops means a bearish reversal. Do you understand? Shared eyes, shared moves. Now, see this. Pay attention to something. Pay attention to something. Look at this shared low. What does that mean? Look at their low. Do you see this low and this low? This is they're the same thing. They're on the same level. Can you see that? They're on the same level. Look at this low and this low. This they're on the same level. Do you see that? Do you see that their weak are also on the same level? Do you see that their weak are on the same level? Pay attention. I hope that's making sense. Look at this. This is that some of them lows are actually on the same side. They're on the same line. These two, some of them, they are lines. The tweezer tops now, the tweezer tops, they share same eye. Look at the two eyes. Do you see those two eyes? Two candlesticks indicating eye, indicating eye, indicating eye, indicating eye. What do you do when you see these things? These two candlestick reversal patterns appears at either the tops or bottom, which means either a resistance zone or what a support zone of a trend. In which these two consecutive candlesticks share either a high or low, which I've said, will represent movement in opposite market direction. In the case of a tweezer top, right? The first, let's talk about the tweezer top, which is this one, right? Now, The first bullish candlestick occurs in an uptrend. Now listen, and closes near the same level as its high. Let's imagine price is pulling up now. Do you understand? The tweezer top will now come. Do you understand? Now close on the same high. Either the wick will be on the same high or it will close on the same high as the previous candlestick. Okay. So now, which then indicates that closes near the same high, which then becomes the high of the second candlestick, which moves bearish downwards towards throughout the day. In the sense that immediately you see this movement, it means that the bears are now in the market. It should be what? It should be selling. Do you understand? When you see the tweezer tops, the tweezer tops are always seen at the top. After a bullish movement, you will see them at the top. Do you understand? I hope you guys understand. Are you guys with me?
Yeah, well, with you.
All right, good. So now, having said that, now we will now focus on the next one, which is the tweezer bottom, right? So now the tweezer bottom, what do you do? Tweezer bottom is the opposite, wherein an initial bearish candlestick continues a downward trend, closing at a near low, new low, which then becomes the low price of a subsequent. Tweezers indicates the order that once price reached a significant level, the top or bottom shared by the two bars, there was a transfer of dominance between bears and bulls. Do you understand? So for the tweezer bottom now, what does this mean? You see it in a downtrend. Immediately you see it in a downtrend, it means that there is a transfer of what power from the buys to the what? From the bears to the bullish. Then for tweezer tops, it means from the sellers to the bullish, right? Then for the tweezer tops, it means from the buyers to the what? To the bearish. Does that make sense?
Yeah.
Let's look for where that form. Now, look at these two candlesticks, right? You can see this bullish candlestick and this bearish candlestick. Look at them. They share both. Their wick are on the same. Their wick are on the same level. I hope you can see that. You can see that. That signifies this particular tweezer bottom when the bottom are actually on the same level. Doesn't matter even if the head or the about are on the same level. But once you see something at the bottoms are on the same level. Okay, look at this. A very good example. Look at this. Do you see the bottom on the same level? Do you see that?
Yes.
Good. So what does it signify to you? You sell straight up. You can see these two bottom are on the same level. You understand? But you also want to pay attention to if the candlestick is going to be bullish, engulfing, or all of this like that. You consider all those things as well. Do you understand? Let's talk about Arami/inside bar. Now, Arami/inside bar, this pattern is a two candlestick pattern in which what the first candlestick practically encompasses the one that follows it. Okay, this signal is established in two ways: an indication that an increase in volatility is imminent. This affords traders the opportunity to create trades that speculate not as so much on directions now, but rather on an increase of volatility on a breakout in any specific direction. All this English, what do they mean? This English are actually what it is. It means that these are two candlesticks, right? Two candlesticks. Now, in which the first candlestick vertically encompasses the one that follows it. Does that make sense? Does that make sense?
Yes.
Now, this bullish candlestick, pow. Do you see this? The next candlestick, do you see that this candlestick is longer than this candlestick, right?
Yes.
What does it mean to me? It means that the buyers are still in power. Do you understand? They can still layer in that zone. It can also be called the engulfing. The engulfing, it's shooting up. Do you understand? An indication that an increase in volatility is imminent. That means in that point in time, the buyers are strong and market is volatile for the buyers. Do you understand?
Okay.
Yeah. So in the context of a trend, an Arami/inside bar can be indicative of exaltation and the onset of a reversal. In this manner, the similar to long wick pattern and evening star, morning star. So it is similar to all of things like that. But you pay attention to how these whole things forms. Okay, how these whole things form. So now the next one I'll talk about is okay. So these ones they are just pretty much what it is. So let's look at it. The kicker. A kicker signal, also known as a professional gap, occurs when the following conditions are met. Price is moving in a trend. Let's imagine it's a downtrend. Suddenly, a gap appears in the chart. Now, this gap is defined as when the price, the opening price of the candlestick is not equal to the close price of the candlestick that precedes it. You understand? There is a gap in the price movement. This gap in the opposite direction of the trend. For instance, imagine that price closed at 10 after valuing over a number of days for 2. You understand? The next day, price opens as 8. In this instance, we have a gap now or a bearish kicker. Conversely, if price fell from 10 to 3 and then opened the next day at 5, it would signal a bullish kicker, a bullish signal for what? For traders. A kicker can be a very powerful sign that a trend is reversing. It is often interpreted as a sign that professional investors have quickly realized that a trend is over and are looking to get out immediately. As such, this signal often precipitates a rapid reversal of the prior trend. So what does this old English mean? Now we are in a downward trend. I mean, price is selling, price is selling, price is selling, price is selling, and all of a sudden there is a jump in price. This particular thing doesn't happen often. Okay, this particular this thing, it majorly happens. Let's imagine probably at midnight when price is price every day price closes by 10. I think it's supposed to be closed now. What is this? Yeah, some price closes at some point then open again. So now whenever this occur, right, what you do is you focus on what is really happening. If it's going to be bullish, that means after a bear, after price has been dropping, after there's a bearish trend, you understand? Immediately there's a gap, maybe in a resistance zone, you understand, or a trend line confirmation and all things like that. You take a note that okay, yes, what did they say here? Powerful sign that the trend is reversing and is often interpreted as a sign that professional investors have quickly realized that a trend is over. It means that downward trend is over. Then the new trend is what? About to start. Okay? Does that make sense, guys? Does that make sense?
Yes, yes, yes.
Right. So now let me go straight to the next one, which is the piercing line. Now, a bullish signal that occurs in the context of a downward trend when after a long bearish candle. Now, a bullish candle opens at a new low and then closes at a level at least halfway up the body of the previous bar. This signal is reliable as a 2-bar indicator of a trend reversal or opposition to the height of the second bullish bar, as the strength of the reversal signal is related to the size of the second candle. This pattern is similar to tweezer pattern, which is discussed later, which I've said. Pretty much, you can see this candlestick here. You can see the next candlestick that came in, right? It came in halfway this particular candlestick. It didn't get to this point. So it definitely signifies now that some of them have same lows, right? As we talked about in tweezer. Do you understand? They have same lows. They have same lows, same lows, same lows, and all. Do you understand? So what you do is you look out for where it is, whether it's in a support zone or a resistance zone. It means what? It's reliable that as the strength of the reversal signal is related to the size of the candlestick. So now, the strength of this reversal is related on this candlestick. If this candlestick is good enough to encompass this particular one, then it means the buyers are now in the market. Now, if the next candlestick is unable to encompass this one, it means that the buyers haven't gained what power in the market. So what do you want to do as a trader? You want to wait for the next candlestick to form. Okay, when you see a piercing line candlestick indicator. Now the next one is the dark cloud cover. Okay, this candlestick bearish reversal pattern is a bearish converse of the piercing line occurring at the top of a bullish trend. The first bullish candle is followed by a bearish candle that occurs at a new high right? And then closes at least halfway down the what? Down the body of the bar continuing. So it's just like the opposite of the piercing line. Okay. So now we have this after a bullish move, then this bullish candlestick is formed. Then there is a bearish candlestick here, right? So now this bearish candlestick now closes above at least more than this point at which this was open. This bullish candlestick is open. So definitely means that the bears are currently trying to gain market. Now, this will determine on the length of this candlestick. Okay, this signal will determine, or this analysis will determine on the length of this candlestick. The strength of the reversal signal is proportionate, right, to the length of the second candle. I thought I made a mistake here. This pattern is clearly conceptually and mathematically similar to the piercing line and tweezer pattern. With that, I hope we all can now mention at least nothing less than 10 different candlesticks in our daily conversation. Right? So now let's talk about the conference. Now, in technical analysis, there is no such thing as a sure bet. Pay attention to that. Do you understand? It is very important that I let you know that in technical analysis, there is nothing as a sure bet. Okay, let me make that clear to you right now. Right now, in technical analysis, there is nothing like a sure bet. There's nothing like a sure die, a sure me. Do you understand? There's nothing like that. You have to. It's either you have a lot of confluences, or you exit, or you don't trade. If you have enough confluences, then you are good to go. Do you understand? So what does this mean? It means that in technical analysis, there is nothing like a sure bet. Okay. So now, what you want to do now as a trader is you want to focus on what is possible for me. What do I have access to? What do I have access to? Okay. Now, the nature of trading is that the possibility of profit comes hand in hand with the possibility of risk. Now, in forex trading, right, for you to be able to make profits, you have to be willing to risk. Do you understand? That is where risk to reward ratio comes in. Do you understand? You have to be willing to risk a particular amount of money. Okay. Now I have $10. Let's imagine I have $10 in my account and I want to take a trade. At least minimum at all, I should be willing to risk just 1%. 1%. Or $10. What's 1% of $10? Is that not 0.01? I mean, but at least I'm willing to risk $1. $1. I think that $1 is 10%, right? So now I should be willing to risk $1. Do you understand? If I'm having a $10 account, I want to enter a trade, I should be willing to risk $1 for a trade. You understand? Just for me to have peace of mind. Out of $10, if I lose $1, I still have $9. Abi? If I take another trade again. Now remember that we are always targeting, and if you are risking $1, what should we be making?
Like,
do you understand? We should be targeting times 2, times 3, times 4. So if I'm risking $1, I should be targeting like $2, $3, or $4. Do you understand?
yes.
Targeting
Yes.
times 2. So if I'm risking $2, I should be making $4 or $5 or $6 at the end of the trade. Does that make sense?
Yeah.
So now it is important that we pay attention to what really matters, right? What really matters. Whereas now, with this uncertainty in mind, you have to have this uncertainty in your mind that, okay, yes, I'm not going to say it's always going to come my way, but I have my analysis. Okay, my analysis have done justice to whatever decision I'm making. Do you understand? And I'm just going to go ahead and sleep and watch out how it plays out. Do you understand? Now, with this uncertainty in mind, the successful application of technical analysis depends on entering the market at the moment when there are as many indicators of the advantageous opportunity outcome as possible. What does this mean? This means that you want to do what you want to make sure that every indicator is showing you that there is a buy. Your candlestick is confirming. Your resistance zone or your support zone, your RSI, your EMA, either 200 EMA, 50 EMA, all of this like that. Your let's say, what other indicator do you want to use again? You can say, okay, candlestick pattern, candlestick formation, is it multiple candlestick formation, and all of this like that. Those 3 confluences, if they are all in your favor, you understand? You can now then up into the trade. Do you understand? Now,
Yes.
the success of the trade, you understand, now depends on how many indicators is showing you to buy or to sell. How many indicators is showing you this particular thing? How many technical analysis is showing you that yes, I should be buying or I should be selling? I hope that makes sense.
Yes.
So now, accordingly, you pay attention to something, right? Now, always pay attention to number one, the grammar for everything I'm going to mention now is what confluence. Just in quote confluences. What I'm going to do my confluences for me to enter a trade. Confluences are basically reasons why I want to buy or sell. Do you understand? Why I want to buy or sell. Are you using your Fibonacci tool? Let me start mentioning confluences so you guys start writing. Okay, so let's go. Number one confluence. Let's go. Indicators. 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 Let's go. Let's go. Let's go. Let's go. Indicators. You have indicators as a confluence.
Okay.
Indicators. Indicators. Okay, so you have indicators, right? So now you want to also consider technical analysis. Technical analysis. Technical analysis. Let's go. Technical analysis. Technical analysis. You also want to consider your let's look at what's it going to be now? Fundamental analysis also. You want to consider fundamental analysis in the sense that you want to, if there's going to be a news coming out soon, you want to pay attention to, okay, going to forexfactory.com to check out the actual from the previous and all of things like that. So you just want to confirm that as well. So now, once you have your indicators, your technical analysis, the technical analysis include, let me start mentioning technical analysis tool that you can use as a very good indicator, as a very good confluence for you. So you want to focus on your trend line number one, trend line, okay? Trend line, your support and resistance are technical analysis. Support and resistance, your trend line, your support and resistance, your Fibonacci retracement tool, Fibonacci retracement tool, Fibonacci retracement tool, Fibonacci retracement tool, Fibonacci retracement, Fibonacci retracement tool, your candlestick formation, candlestick formation, candlestick formation, your candlestick formation. Then you have to also focus on your what is it called? What is this thing called? Coming. Okay, so you want to focus on your what other tool do you want to focus on now? I've mentioned support and resistance, right? I mentioned
Yes.
Fibonacci too. Like you want to also focus on the trend at which the market is going in. You understand? You should
Yeah.
always have that at the back of your mind before you enter any trade. You must don't go against the trend. Don't ever go against the trend. Do you understand what the trend means? If price have been bullish all over the time, if it's in an uptrend, you understand? Don't go
Yeah.
in and go and be selling. It's very important. In an uptrend, don't go in and go and be selling. You should be looking out for opportunities for you to open a position and buy in an uptrend. Does that make sense? As far as the trend has not reversed. Do you get? So
Yeah.
now that's very important. So the trend of the market is also a very good technical analysis for you to put in mind. You understand? So
Yeah.
then another one you want to pay attention to is channels. Channels is also a good fundamental, technical analysis you want to pay attention to. Channels, you want to pay attention to channels. If there's channels being formed, okay, with the channel being formed, you want to pay attention to that. I will take all these things one by one in our next class. Okay, so with that, I'm going to just stop the class now, and I'm going to see you tomorrow. Is
Please,
there any question for me?
I have some questions.
Okay, okay, yeah,
Yeah. Firstly, as a technical analyst,
yeah.
so can you is it okay to take a your analysis from, okay, let's say you analyze a chart now.
Yeah.
So are you taking the analysis from the middle of the chart or from the end of the chart,
Okay,
or you
okay.
can just take, or from anywhere of the chart
Okay, okay. So
before you
like you
can
mean
carry out the trade?
okay, so I'm coming. Let me see. I'm trying to understand what you mean.
Yeah.
But uh, okay, connect. So now, let me share my screen. Okay, you can see my screen, right?
Yes, I can.
All right, good. So now, as a technical analyst, what you pay attention to is now you see that. Let me just use support and resistance, right? Which is one of our two, right? We use support and resistance very well, right?
Okay.
So now, support and resistance. Now, this is support and this is a resistance zone. Have you?
Yeah.
Now, immediately I see price in a resistance zone. What occurs to me is that I have to do what? I have to sell. Okay. In a
Okay.
resistance zone, what you should be looking out for is to sell. Okay. So
Okay.
now, as a technical analyst, what you do now is once you see that, let's imagine that all these candlesticks have not formed. Okay. Let's cover all these
Okay.
candlesticks now. All this one that I just draw my box on, they are
Okay.
not there yet.
Yet. Okay.
They are not formed yet. Do you understand? These
Yeah.
candlesticks are not formed yet. They are not there yet. Do you understand? Nothing is there.
Okay.
Price is just in this zone. Price is just in this zone. What am I
Okay.
supposed to do? What am I supposed to do? I'm supposed to wait. Do you understand? Once I
Okay.
get my confirmation, either with that candlestick patterns, those candlestick I just mentioned. Do you understand? Once I
Okay.
see any of those candlestick, I have one confluence. My first confluence is okay, price is in a resistance zone. Abi,
Mm, yeah.
my next confluence is I've seen a doji candlestick, or I've seen an hammerhead, or an inverse hammerhead, or I've seen
Okay.
three black crows, or I've seen one of, do you understand? I've seen three white soldiers. Do you understand? I've seen one
Yeah.
of those things. I want to check my RSI. Is my I'll talk about RSI later. My RSI is in an overbought zone or oversold zone. Do you understand? Those are the things you will be
Okay.
targeting. Do you understand? Before you then what you now do next is to go to your what? Your MetaTrader 5. Okay.
Okay.
Immediately, you know you're supposed to sell. You want to short
Yeah.
from this zone. So you click on short. You come to your trading view, click on short. You know you're using your trading view to analyze. Are a technical
Yes.
analyst. So now you
Yeah.
set your stop loss, right? You set your stop loss. Once you set your stop loss, set your take profit. Do you understand?
Uh,
At least times
another
two.
question. Another question. Yeah. How do you set it to times two? Like.
Okay, okay. So now once the way I'm dragging this now, this is the way I'm dragging it.
Yeah.
So pay attention to this number here. Pay attention to this risk slash reward ratio. Pay attention to that number. Okay.
Okay.
You know this is where I entered, right? This was where I entered. This was where I entered price for.
Okay.
You know this is where I entered, right? See where I entered.
Yeah, I can see that.
Okay, so I'm coming out to check something. I think something is happening on GBP right now. Okay, so now you can see that I entered at this point, right?
Yeah. Yeah.
I entered at this point. This is my entry point. Okay, so now pay attention to this risk slash reward ratio. Can you see that? What do you see there? What
Yeah,
do
I
you
can
see
see
on that
that.
risk? What do you see on
Four
that
point
risk
seven.
slash reward ratio? 4 point what?
4.26.
26. What that
Yeah.
means is that if I'm going to lose $2, okay, I'll be making $4.
Oh, okay.
Now, see, if I'm increasing this, do you see that the number is increasing?
Yes.
Now, what does this signify? It means that if I'm risking $2, okay, look at this point, 2.7, Abi, I'll be making
Yeah.
5.15 if price hits my TP. Now, see something.
Okay.
If I move this upward, do you see that it's reducing? Do you see that what I'm going to make is reducing?
Yeah.
So it signifies that this point in time, I have to calculate my risk slash reward. So now I am risking, let's imagine I'm risking $5 now or $4, right? $4,
Okay.
4.2 as you can see there. Now, if I'm making 4.2 now, I am actually in a ratio of 1:3. Do you understand? Which is here. Do you see that?
Okay.
3.3. So if I'm risking $4, I should be making 4 times 3 is what?
That's 12.
12, Abi. Do you
Yeah.
see? You can see 12 point at least 31. You see, that's why I am seeing. Can you see this number? 13.9, which is approximately 14. So clearly, if I'm losing what $4, I should be making $13 if price hit my TP. Does that make sense?
Okay.
Do you understand? So now
Yeah, I
if
understand.
I'm moving this upward, pay attention. This is that price is reducing. This is that 9.4. This is that. It's
Yeah.
called target. This is that target 9.4. Price is reducing. This is price is reducing. This is price is reducing. So now,
Mhm.
what do we do
So
now? Let's okay, yeah.
okay.
Go
Okay,
ahead, go ahead.
that's what you just do now. That's what will determine the amount you want to risk and the amount you want to and the reward of the risk, right?
Yes, reward to ratio, right? So now this
Reward
is
ratio
just
rather.
showing you, yes, this is just showing you what you are going to be, what you want to do. So what you now do when you see, when you have this, okay, when you have this already, okay, what you want to do next is you want to go to your MT5, okay, your
Okay.
MT5 immediately. You go into your MT5, you enter a buy, a sell. I mean, you know you are selling, yeah, abi?
Yeah.
You enter a sell, then you set your stop loss to 1.27978.
Okay.
Okay, you set your stop
Okay.
loss to 1.27. Do you know how to set your stop loss? Did I show you how to set your stop loss
Yeah,
on MT5?
modify. Yeah, modify. I want to
Yeah,
modify
exactly,
chart.
exactly. So good. So now you can see this now. Your target, your take profit will now be what? 1 point. This
One,
number
one,
here. You can see
yeah,
this number here.
okay. Okay.
Do you understand? So
Yeah, I
now once
understand.
that is done, what will now determine your money, okay, which I have not talked
Okay.
about, is your lot size. The amount. Do you know what lot size is? If you go to if you go to your MetaTrader 5 now, okay, you will
Okay.
see something
Yeah.
like 0.01, 0.02, 0.03. Let me show you something.
Okay. Yeah, sure.
So that lot size, I'll still talk about it separately. That is what will
Okay.
determine, do you understand? That will be what is going to determine your risks, your the money you are going to make or the money you are going to lose. Does that make sense?
Yeah. Okay.
So that your lot size that will determine. But when you okay, see this now. If you pay attention to this, I don't know. Okay, can you see that 0.2?
0.2.
Yeah,
I can't see it.
0.25 or something.
No, I can't see it.
This is serious. You
I okay. Are you trying to share your screen? Like
no, I can't
another.
show you my. Let me send this through Bluetooth. I'm coming.
Okay. Okay. Are you talking about the 0.0042 like that?
0.0042. Let me see.
Yeah.
Show me what you're saying.
Yeah.
Is it
I'm
on your
seeing.
phone?
No, I'm seeing from the chat. Like from this chat
Okay,
that
okay.
is.
It's not on the chat. It's not on the chat.
Yeah. Yeah. Stop. 0.0042 into bracket. And there's a bracket. 0.3. 0.03%. 4.2 something like that. Is that what you're
Okay,
saying?
it's not that one. No, it's not
Okay,
that.
it's not down. Okay.
Yeah, yeah.
Maybe you should send to the
So
group. I
now
can
just
just
yeah. When you know go to your MT5, go to your MT5 on your phone.
okay. Let me share my screen.
No, you be able, I'm not sure you'll be able to share your screen because it's your
Okay, yeah,
phone,
you
right?
can't, you can't. Okay, let me
Yeah. So
minimize that.
let me show you my screen again. Extra. Oh, okay. Yeah. This is you. Hold on. All right, Israel.
Yeah, I'm with you.
So you can see my screen now, abi?
Yes, yes, I can see that.
Exactly. So you see, immediately you open a position on a trade, right? You will see this thing. Do
Okay.
you remember where this thing is? On your trade icon, when you go to trade, you will see this here, right?
Yes,
So
yes,
now, do you see this particular figure by the side?
yes.
That is what the lot size is called. Okay. So now
Okay,
I'll actually explain that later. So you can see that this lot size is what is determining what I'm making. Do you understand? This
okay,
lot size, what is determine what this particular trade is making. Do you understand? So
okay,
pretty much that's just what determines how much you make. Do you understand? So when you have a particular lot size actually depends on how much you have in your account. So if you have like
okay.
$100.
Are you going to be the one to choose the amount you want to risk for that particular trade?
Okay, so when you have a lot size, right?
Yeah.
You are the one to actually choose. But
Okay,
standardly, we advise you to risk 1% of your account balance. 1%
okay,
per trade, per
okay,
position you open. Any position you open like this, just know you are risking 1%. So imagine you have $100 in your account, right? You should be
okay.
risking at least $1. But since it's $100,
For each,
$100 is
for
small
each, for each
for each
position,
trade.
right?
Yes, for each position.
Okay,
That's anytime you open a position, once you click sell like this, that particular
okay,
distance you should be risking at least $1 or $2. Do you understand? But
okay, I
if you have
understand.
$100, you should be risking at least 10. You should be risking at least 10
10.
for a trade.
Mm,
Yes, you get. If it's $100 you have in your account. But if it's $1,000 or thereabout, just be risking 1%, 2%. I know. You get.
Yeah, another question, please.
All
On the
right.
chat, you said something like 15 minutes, 5 minutes. I don't really know what
Yes.
that means.
Okay, so that means there's different time frames, okay? Different time frames to
Okay,
different ways to which these candlesticks can be seen. You understand? So for
okay,
1 minute, each candlestick in 1 minute are formed for 1 minute, like 1 minute. Once it's 10, 12, 10, 11, 10, 12, 10, 13, another candlestick will form on 1 minute candlestick. But on
okay,
5 minute candlestick, each candlestick will last for 5 minutes. So if imagine time
okay,
is 10 o'clock now, next candlestick
okay,
that will be formed at 10:05. Do you understand? Or
okay,
10:06. So after
okay,
10:06, the next candlestick that will be formed 10:10. Do you understand? 5 minute
okay.
interval. 15 minutes.
So how
15
does
minutes.
how does that affect the analysis or the trading
Okay,
order?
yes. So now when you're analyzing, we advise you to go from the higher time frame, 4 hours, right? So you will see the
Okay,
reason why you go for 4 hours first is because you want to know the trend of the market, whether the market is going up or down. Do you understand?
okay,
You
okay,
can't see this particular thing in 1 minute. You see a lot of trends in 1 minute. You'll be confused. You understand?
okay,
But you want to see the view trend, you go to 4 hours. Then after 4 hours, once you analyze your 4 hours, you come to what? 1 hour.
now
You
wow,
analyze your 1 hour too. Once you come to 1 hour, you come to what? 15 minutes,
15.
where you do all your work. You do all your work in 15 minutes. You
Okay,
execute, you make your decisions and all of things like that in 15 minutes. Do you understand?
okay,
You can also go to
I
one
get it.
minute to go and check out candlestick confirmations. Do you understand? If you go to 1 minute,
Okay,
you're only going there for one thing, candlestick confirmation. Just want to go and see whether price has formed W, or there's a pin bar, or there's a shooting star, or there's one of all those things. Do you understand?
okay, okay, I understand. Thank
So
you very
that's
much.
the advantage of those different time frames. You see prices, they each of them have their own advantage for real. For people who are swing traders, okay, swing traders do all the analysis and trade on 4 hours, okay. But as for
Okay,
a day trader, right, which is just somebody who just trade every day and exit, you understand? All you
okay,
just need to focus on is your 15 minutes. That's where you should trade. But first of all, go to 4 hours and do your top down analysis. Does that make sense?
mm, yeah, I
Touch that
understand.
now. So yeah. So what other questions do you have?
Yeah, not at all. I don't have any.
All right. Thank you very much. I really hope you
Uh,
understand.
yeah,
Okay.
you say you're going to get back to me concerning the
Yes,
assignment I
that
submitted.
reminds me. So when you are drawing a resistance or support zone, right? It is
Okay,
important that you pay attention to just hold on. you pay attention to why you are drawing it. Okay, do you understand? You're not just
Okay.
drawing it because you want to draw. Okay, you are drawing it because you
Okay.
want it to give you money in the future. Does that make sense?
Okay. Yeah.
So now, if I'm to draw a support a resistance zone now, I just
Okay.
what you did was right. What you did was right. But I just want to
Okay.
make you know that it's not just you're not just drawing it just
Drawing
for
for
drawing. Do you
drawing
understand?
sake.
You're drawing it.
Okay. I
You get.
understand.
You're drawing it because you want to use it to make money in the nearest time. So you see
Okay.
what I did now? Nothing concern me
Yeah.
concern all these ones. Nothing concern me concern all these ones have gone. My own focus now is
Okay.
as price. Do you know that price is forming now? Do you understand? As price is
Yeah.
forming, how can I make money? You understand? Just like
Yeah. I
previously,
understand.
before all these things formed, when price came here, somebody should have sold. You should have sold. You'd have made money, right? Price came again
Yes.
to that zone again. You see that you can make money like this. When price come to resistance zone, you make money again. When price come to resistance zone, you make money. Price come to support zone, you make money. Do you understand? It's simple. Simple ABC.
Yeah. I understand.
You see this? Price come to a resistance
Yeah.
zone, you make money. Price come to a support zone. This is a resistance zone. Price come to a support zone, you make money. Resistance zone, you make money. Come back to a resistance zone, you make money. Come back to a support zone, you make money. Do you understand? You know, in a support
Yeah. I
zone, you are
understand.
buying, you buy, you make money. Price come to a resistance zone, you sell, you make money. Do you understand? Except
Yeah. I understand.
when price break through these zones. Price can break through these zones. But I will go through it. So now, this one now, this is that price has not come yet. Price has not even gotten to this point.
Yes.
So now what you want to do now is you just want to wait patiently. Just be watching. Go back to the chart after today, tomorrow. Go back to the chart. You understand? And you get back to the chart,
Okay.
you see that once you see that price is close to this point, you want to stay at alert. Do you understand? Immediately price
Okay.
enter this zone like this. Carry your shot and shot, sharp, sharp. Do you understand? You shot straight up.
Okay.
Don't waste your time. Target times two. Does that make sense?
Right. Yes.
So now that's the major reason. So you don't have any business with the ones at the back. The only one you have business for is what's currently happening. You understand? Kilo shele
Yeah. I understand.
what is happening? What's happening at the current moment? So and what am I projecting? So I'm projecting for price. If price get to this point, right? Price get to that zone, I should do what? I should sell.
So.
So that's
Yeah.
the
I
major
understand.
that's the major thing you pay attention to when it comes to support and resistance. So you understand?
Yeah. I understand.
All right. So thank you very much for
Thank.
joining.
Thank you very
So
much.
let
Yeah.
me
First.
let me just give you a quick assignment, right? So just go ahead and
Okay.
identify any doji, any of all those candlesticks. Identify all of them. Do you understand? Screenshot them, stack them, and show me and send them to me. Do you understand? I want to be sure
Okay.
you have a clear understanding of each candlestick. Do you understand?
Okay. Okay.
All right. All right. Thank you
Yeah.
very
Thank
much.
you.
See you tomorrow.
You're welcome. Yeah. Good night.
All right. Good night.